So one of our challenges is the fact that it's been difficult to find big, best-of-breed verticalized solutions. It's interesting that in our industry, the big technology players are not the ones who have done a good job selling solutions to the insurance industry. Microsoft, whose offices we're in today, I mean, Microsoft would disagree with me and say that they are the most used insurance technology in the world, and that is Microsoft Excel. And that's true, but I'm not necessarily talking about Excel. I'm talking about kind of the core systems that are tailored to insurance companies and for different lines of business, policy administration, claims administration. It's a very difficult market business place, and the US is particularly difficult because you've got 50 different states that in many ways act like each like their own little country in terms of rules. Building these solutions to support them is tough. And there's still been a lot of internal build, and we're seeing today a lot more vendor solutions are starting to fit that niche, but for 30 years, it's been hard to find a solution that would really satisfy most insurers' needs. And that's changing now, but it's really limited the industry's ability to advance. When you build something yourself, while it gets you exactly what you need, it means you miss the opportunity to leverage external expertise, to leverage, it puts you in a position where once it's done, unless you're continually updating it and innovating it, it stays stagnant. And that's limited the industry, and it's one of the reasons why insurance has been really behind a lot of banking and a lot of the other financial services technology investments. It's also the business model that has limited us. We've really been reluctant to change business models. The agent channel has really controlled the insurance industry's ability to innovate. It's really put a distance between the insurer and the customer. When we talk about data analysis, and a lot of insurers, actually a lot of vendors talk a lot about cross-sell and how we can help you do a better job cross-selling. But the reality is, just because you have a customer who has auto insurance through you, and now you say, oh, great, this is a perfect target to sell home insurance to. Well, the agent owns that relationship. And frankly, that customer may already have both auto and home just through different insurers. And the agent has managed that and purposely kept you at a distance from them. And that's not necessarily a bad thing. It's a bad thing for the insurer who wants to really have a better connection. And so that channel has limited us. That channel's, to be clear, I'm not saying the agent channel is a problem or bad. It's just changed the insurer's ability to really make technology innovation work for them. But it's also this idea that this is a highly regulated industry. It takes 6 to 9 months to launch new products because you have to go through filing and legal, and you then need to be coming up with products that by the time you launch that product, the reason for launching that product 9 months ago might have gone away. You might have missed an opportunity. A lot of times insurers spend a lot of money on new systems to get a better speed to market. We saw speed to market as one of those top drivers. But the reality is, a lot of insurers find they spend millions of dollars and years putting in new core systems. And it's true, the technology side of launching a new product has gone down from like 4 months to 2 weeks or less. They've really, really fixed the IT expenditure portion of launching a new product. But then their 9-month new product launch cycle is still 9 months long because it turns out IT wasn't the bottleneck. It was just one of the big expenses. And I'm not saying it's not a great improvement to allow IT to do more, to have less expense. They can be really working on new features and new systems and new innovation. But just because you put a new system in, that kind of regulation and the sort of existing business process really limits that kind of flexibility. Sure, absolutely, please.
Go back a few sentences.
Sure.
Just want to make sure I heard you correctly. You brought up the agent example.
Yes.
Well, the agent, the cross-sell may not be relevant because the agent may have already done his or her
Right.
job and already cross-sold.
Yes.
And you said you didn't necessarily want to blame the agent per se because the agent's taking care of their business, right?
Right.
They're doing what they have to do.
Yes.
So we don't blame the agent.
Right.
Then we look at the carrier.
Mm-hmm.
You see where the real disconnect is on the carrier side. It's really in the underwriting.
Yep.
Okay? Because the carriers, many of them,
Yes.
are confused. Many of them rate based upon the consumer himself.
Yes.
Okay? You look at the answer and they say, what did I tell you? There's 4 key metrics, right? But They haven't translated that to the homeowner side.
Right,
Because homeowners are so unpredictable, where the home is located in a more rural area versus in Brooklyn.
right.
So meanwhile, they found the customer they want, and they don't apply the rates correctly in both lines of business.
Okay,
The agent's left with no choice but to take care of feeding himself or
Right.
herself. Say, well, I've got this customer that wants to give me money.
yes,
I'm not gonna not do business with them because carrier A can't make up their mind.
right,
I'll just use carrier A and B.
right. Yeah, they,
So it's an easily fixed problem. There are some carriers
Yes.
that have said they're close to that.
yep.
But for years now, and even on the largest of companies, there's
Mm-hmm.
a massive disconnect.
Yes, I totally agree, and it's part of why it's not the agent's fault. It is the insurer still needs to be thinking about these things and understanding the consumer better, whether or not the agent they're doing a direct sales pipeline or using an agent channel. But I also think that's part of that is the lack of data understanding at the insurance companies. You know, we saw some of those data analytics disparity slides, and you see such small percentage of the industry is doing predictive modeling properly. But I also think where one of this disruptive changes is going to happen is that some of that data gathering is going to be done outside of the industry. There will, not the industry, outside of the insurers. There will be third-party companies, LexisNexis, Verisk, ISO, that have bigger databases about property risk, about auto risk, about commercial property than the insurers, an individual insurer can ever have. And to the point where you won't necessarily, those problems will be resolved, but not necessarily resolved by the insurers, but resolved by these third-party companies that just do it better, that gather the data and information that you're talking about, that allows them to make better decisions, so they won't be making mistakes. But I also think, but we also have this long-term problem of siloed systems. It's not so much about cross-sell as it is about an auto system that is totally divorced from the property system, so that they can't be thinking about discounts. They can't be thinking about how both interact with each other. And so from their point of view, when they do a home quote, it's isolated to home only. They don't think about the bigger picture, about how much more opportunity there is with this person on the auto side. And that's why you have agents who are saying, well, I have to go to a second insurer because they're thinking about this differently, and therefore they're going to give, each of them are going to give better, one's a better price here, one's a better price there, instead of one insurer who looks at the whole package. And so we definitely, we need to be thinking about consumers. We need to be thinking about consumer views for the 360-degree customer view. I think the other piece of that is that even when you have a single system for both products, our traditional approach to technology in the space has been policy-focused. So normal systems, as they are today, you look at a list of policies, not a list of customers. They're not built around thinking about the customer and how they're buying your insurance. And that's another thing that I think, and I wouldn't say that modern technology necessarily solves that problem unless it thinks about it differently. So, I mean, that is definitely something insurers need to look at when they're looking at new technology is how does it think about the customer? Does it have a customer view? And does it allow us to solve some of these issues?